morning, traders. Take a look at this market open. This is key Fibonacci support and this is key Fibonacci resistance. This is 1 minute chart showing you very clearly buy from support, not into resistance. This is what market does at the open. Stage a spectacular fake out. Massive chop back and forth. Exact same formula applies to 5-minute chart. Take a look. Buyers stepped in from trend inception, reversal zone, 2620 in overnight session. Buyers stepped in at another support in overnight session. Buyers stepped in at another key support. And if I convert this chart to 15, exact same formula remains. Knowledgeable trader has zero interest buying into resistance. This is where market sold off on January 22nd. This is the end of the minor trend. This is war zone. Not a place to buy. And this is hourly chart. This is the core of the method. This is long-term trend levels. You learn how to apply in Mastery course every Thursday class. Before price can skyrocket and trend can become major, this is a problem. 3 hours S&P in pain. Price sold off from reversal zone last Friday. Buyers stepped in overnight session on Tuesday. Knowledgeable trader has zero interest in touching this. So, let's convert this chart to 1 so again you remember. Do not touch a bait. Do not touch nothing unless it's a trade. This is a bait, not a trade. Knowledgeable trader doesn't have heart palpitations, doesn't have sweaty palms. Knowledgeable trader knows not to buy into resistance. What a spectacular fake out. Knowledgeable trader knows this. This is market open on January 23rd. And this is exact same dance on Apple. In 2017, 2018, exact same problem as on any day trading chart on S&P. And where did buyers come from on Apple? From key institutional support. When Apple was at 91, exact same strategy. Apple doubled at 91 to 181. When Apple was at 91, Apple came out with the worst earnings in 13 years, 2015. Before Apple skyrocketed to reversal zone, as everyone knows, that's where Apple crashed from. This is what Apple done, just like S&P. Where is Apple now? This is what Apple doing. Exact same thing as S&P. Frozen in pain. At what level? The end of the minor trend for the last 2 months. Present in front of you for years. Knowledgeable trader not touching this. Knowledgeable trader never buying into resistance. Knowledgeable trader never buying into reversal zone, no matter how spectacular earnings are. The events on Apple, very powerful reminder. Taking Apple a year to break through. Taking Apple 2 months to freeze. Exact same strategy on S&P. Do not touch this. It's a bait. It's not a trade. Exact same thing played out on S&P long-term investment charts. Do you remember this? It's a problem. 2200 number 2016. After the election, bullish rally skyrocketed until 2300. But this was a big problem, as S&P struggled at this resistance for 7 months before it reached next level, identified many months in advance. And this is S&P. It's a bait. Buyers fully in charge. Knowledgeable trader not touching this. Knowledgeable trader buying at support and selling at resistance. What is the problem this morning? Buyers fully in charge. It's a worthless correction. It's a brutal, nasty chop. We've been here for the last 15 minutes. This is how you stop sweaty palms and heart palpitations. When you know what separates trade from bait. Simple. If complete beginner trader can master this after a couple of classes, so can anyone. Only if rules are met, you can take a trade. What does knowledgeable trader do right now? Walking his dog, practicing his swing, not wasting his time on this junk. When market freezes in resistance, in worthless corrections, who is making money? Your broker, not you as a trader. There is no reason to sell. Buyers fully in charge. There is no reason to buy. Buyers frozen in non-stop chop. Only if rules are met, trader will sell the market. Only if rules are met, trader will buy the market. No matter if it's long-term Apple, no matter if it's S&P. Whatever it is, rules must be met before you ever touch a trade. Buyers fully in charge. Cannot touch this. And this is exact same resistance on Netflix. Spectacular earnings don't mean a thing. Fibonacci resistance means everything. How many dollars did Netflix sold off? Spectacular earnings 4 days ago. Look at this. Netflix down almost $40 per share. What is knowledgeable trader monitoring for? Key support. Do not short. And this is Netflix in the month of October. Spectacular earnings don't mean a thing. When market at this key resistance, expect sell-off. This Fibonacci support 315 been present in front of you for over a year. Let me remind you the events of last year, before Netflix crashed through famous support 315. Spectacular earnings don't mean a thing. Fibonacci support and resistance mean everything. Netflix crashed completely despite adding 7 million subscribers. Whatever the number of subscribers added, it was very high. Again, very bullish news. 315 again, lifeline on Netflix. Rules are met, take a trade. Do not touch a bait. And that remains constant, no matter what you trade. Key rules in Fibonacci Mastery course every Thursday. Long-term trend levels. S&P crawling, S&P in pain until this level, just like Apple had done. No surprise, in 2018. All identified in advance. S&P day trading chart does exactly what S&P weekly had done after the election. All identified in advance. What is the difference? This is your investment decisions. This is your day trading decisions. Market in pain. So traders, here we are. IBM at key Fibonacci resistance. Knowledgeable trader know what to do with his or her position. Rules are met, you can take a trade. Exact same place where S&P is. This is a chart present in front of you since last year. To remind you, this is what IBM looked like a couple of weeks ago in October. IBM at trend inception. Clear on this? Rules are met, take a trade. This is IBM a week later. Key resistance is a problem, as expected. There is no trade, it's a bait. And this is IBM in the last few weeks before the earnings. Reversal zone not the place to short. Reversal zone key to monitor for long. And this is IBM before earnings. Clear on this? Do not shorten to reversal zone. Rules are met, you can take a trade. Chart present in front of you since 2018. Testing you right now to the core. What to do with your position? You must know the rules. IBM at key resistance, just like S&P. Present in front of you since 2018. Just like Apple, just like Netflix. And here's oil traders. Today, oil news. Knowledgeable trader knows what to do. Let me remind you where oil is. Oil at key Fibonacci resistance present in front of you since 2016. Taking oil almost a year to break through this key resistance. This is where oil been frozen for the last 2 months. No surprise whatsoever. And in case you missed the events of oil last year, let me remind you, this was oil at the start of 2018, showing you very, very clearly 77 reversal zone. And what happened on oil when oil reached reversal zone is no surprise. Started selling off. Started crashing completely as expected. 64 key support is out, oil in free fall. As I say, 64 is out, 55 is next. Did oil do this? Of course, as expected. Oil bounced from 42. Clear on this? 54 key resistance in a play on oil now. All identified a year in advance. This is oil now. Not the place to enter into. Key resistance on Apple, on IBM, on oil, on S&P. It's all the same. Identical strategy, focus of long-term mastery course every Thursday. So one of the most important parts of the website is information about the courses. So I highly encourage you to review if you would like to join us in Mastery course. It's a 12-week course. Class is recorded and you can view videos at your convenience. You learn how to apply Fibonacci levels. You learn how to use pure price and Fibonacci on any instrument, any time frame, any platform you choose to trade. I'm with students 4 days a week, Monday through Thursday. Recently, one of the students, Tom, who is an options trader who is currently in the course, sharing his journey and what he had done since he had taken the course. Brett sharing his journey, what he has done since taking the course. Drastically two different styles of traders. Tom is an options trader. Brett, right now, day trading is his focus. Brett also trades options but prefers day trading at this time. Both been trying for many years. Stories like Brett's, stories like Tom's, is the reason I live and breathe what I do. So, pretty please review the information on the website, and if you have any questions, do not hesitate to contact me. info@fibinstitute.com or 925-257-4299.